How low are expectations at this point for the year?
Well, if you take a look at how earnings have dropped since the beginning of last year, meaning we've seen about 400 or 500 basis points come out of the earnings growth rate for 2019, which is pretty big. It's cut in half. But I also think, too, that most investors are kind of running under the assumption of the 3 R's of 2019. So number one is regret, number two is the retest, and number three is recession. So let's talk about the earnings recession that many people are scared about, Sarah. We need to see 2 negative quarters of earnings to have a true earnings recession. And we just don't think the math adds up, that you can actually see those 2 negative quarters. Now, there's no doubt that earnings on a relative basis are going to be slower, meaning less positive. But under that environment, that creates an opportunity to be a stock picker, to find those names that are not only growing stronger than the market, but have valuations less than the market. And I think we're entering into a period of where you want to own fundamental stability. And U.S. large caps, we believe, are going to be the home for stability.
So when we get a pre-announcement on current quarter revenue or earnings, but they say they're going to make it up for the year, you buy it?
I do, because CEOs have learned, Carl, the last 10 years is that defense wins championships, right? So CEOs in America have ratcheted down their numbers to underpromise and overdeliver. So we're setting up for, we believe, a second half that could surprise people, just because we're playing so reactive defensive policies with respect to fundamentals and what we're looking at in terms of forecasts.
What's your level of optimism, Mark, as you look at all of this through an economic lens, with so many policy uncertainties out there, like trade and the shutdown?
Well, it depends on how those uncertainties resolve themselves. I mean, if you take the working assumption that they resolve gracefully, that the president can figure out a face-saving arrangement with China and get out of this trade war, that there's no shutdowns, they don't take it over the cliff with regard to the debt limit, Brexit's not a lot of assumptions. It's just assuming they all play out reasonably well. Then it should be an okay year. I mean, fundamentally, we're creating a lot of jobs, and when you're creating a lot of jobs, unemployment low, wage growth is strong. We're in a very strong, virtuous economic cycle, so it's pretty hard to break. We're doing everything we can to try to break it, but I think assuming that policymakers, lawmakers kind of get it together here and don't go off the rails, I think the economy should be okay.